Welcome back, and we're continuing conversation this Tuesday morning. We have with us Jashandeep Singh Chadha, who's the Vice President Equity Research at Nomura, joining us and tracks cement quite closely. Jashandeep, let me start off by understanding how you're viewing trends, especially in South India, with regard to your channel checks, what they're indicating in terms of the price trend with regard to cement. Have price hikes been undertaken in January? What are the pricing trends you're seeing on ground?
Yeah, hi. Good morning, Harsh, and
Very
thanks
good
for
morning.
having. So first of all, we need to understand, how the fourth quarter usually works. So fourth quarter is normally a volume push quarter. So usually price hikes don't happen in this quarter. Even if the industry attempts price hikes, they don't sustain. However, we are coming off a quarter where we saw GST cuts happening, and because of that, the cement prices, reduced a lot, especially in the regions of South and East. The cement prices reduced more than what was warranted by GST cuts. So in lieu of that, the industry attempted price hikes in January and especially in February. In South, I'll say the actual price hikes were attempted in February. So in Jan, the price hikes were taken, they were rolled back. In February, the around 20 rupees, 15, 20 rupees price hikes were announced, out of which 10 rupees have sustained. So it's a positive step for the South Indian market because we are seeing price hikes happening in February, which is not the usual case.
And Jashandeep, does this mean that demand trends underlying are likely stronger than what we were penciling in for Q4, which is anyway a seasonally strong quarter, and therefore are demand trends really stronger? Is that what is driving price higher?
I think there are two reasons why this price hike is happening. Firstly, the prices were coming off very low base, and for March, I do not see any subsequent price hikes happening. Any significant price hike will only happen in the first quarter, as per our channel checks also. Now, coming to the demand, I believe the demand is strong as it is normally in the fourth quarter. However, we are not seeing any significant uptick than what we were expecting. So the demand is largely in line with the expectation. It is more to do with, let's say, the category A players, the major players maintaining price discipline and pushing for price hikes, and the industry coming from a lower base. I think these are the main reason. Then demand anyways is, as it normally is in fourth quarter. It's largely in line, strong, but not significantly, higher than what we were expecting.
And therefore, what should one extrapolate from this trend? Uh, if you're saying that the category A players are maintaining pricing discipline, it's a big positive, right? Because we've come off a large consolidation. That consolidation is still continuing to play out within the space as a whole. And then you're saying that the category A players are starting to maintain that pricing discipline. Is that sustainable? Is that a trend that will likely play out in FY27 in a larger fashion? Can we see maybe a 5% kind of growth in pricing at least in FY27? Is that something you would start to pencil in?
Yeah, Harsh, I think that's the golden question, right?
Yes.
Whether the players will maintain discipline, especially in an overcapacity market. We have seen, the industry doesn't have pricing power, and players generally don't maintain pricing discipline. However, yes, it is a positive sign how we view it. We see a change in the I'll say in the approach of major promoters and management which are running large enterprises in South and in Pan India as well. That there has been a change in approach. They are more moving towards more value than volume. So I think in future. Maybe it won't happen overnight or over a couple of quarters, but in a couple of years I believe the companies will be fighting for market cap versus market share. So yes, definitely on the at the top management there has been a change. And how we should look at, I believe in the first quarter we will have very good signs, especially in the South India. Our dealers expect at least 40 to 50 rupees per bag price hike, which usually used to happen earlier. Pre-COVID, it used to happen. A large price hike used to be taken in South India. For last couple of years, we are not seeing that. We are seeing small 10 rupees, 15 rupees price hike. But I think because of this increased discipline, low base effect, and the new year starting, April, May, we might see a huge price hikes coming in, close to 40 to 50 rupees per bag in South India, especially.
And how should one look at volumes as well? Give us a sense of that. FY26 has been a largely inline kind of year. Can there be positive surprise on volumes, or will it again depend on how the monsoon plays out? And could there be negative surprises there? What are the risks of any negative surprise cropping up where the volume number is concerned?
Yes, I think for FY27, the biggest trigger for volume will be rural demand, the rural economy. I think government has done a lot of taken a lot of initiatives like GST cut, income tax cut, and then we have increased contribution to welfare schemes under the recent budget. So government is also pushing a lot of consumption. I believe rural segment revival is one of the biggest factor we should monitor. We expect FY27 volume to be higher than FY26 by close to 7 to 8% YOY. And rural economy will be the biggest driver for that. The biggest negative I'll say might be the state capex. So state capex is one thing that has not picked up, and we are seeing small or incrementally the central capex towards housing has also not increased that much. So the major chunk of demand will be coming from housing, and that too from rural segment. So the state capex need to pick up. The central capex should be, at least the disbursement of the funds should be on time for these, demands to come back. Any delay in central government capex or any delay in state government capex might result in negative surprise. But we are quite bullish on, rural demand, rural recovery. I think rural will outshine will offset any lag that we'll see in other sectors.
All right. And how should, okay, let me try and break this down in a better kind of format. The next year, maybe there are some uncertainties there, but over the next 3 years, Jashandeep, should the next 3 years, in terms of volume as well as value, be materially better than what we've seen in the last three? Because it's been a difficult kind of a cycle that cement is coming out of, but we're not seeing them come out. Now, I know that the timing of it is difficult and therefore it's tough to call will it happen FY27. But will there be a material improvement over the next 3 years is what I'm trying to kind of see if you have a view there.
Yes, I think going forward 3 year will be better than what we have seen in the last couple of years. It is not the volumes on which I am placing my estimates. It's actually the value or the pricing. I think change in attitude of the management and with consolidation, most of the volumes will be picking up. I believe in the next couple of years you will see more pricing strength in regions like East and South. Hence, in terms of volume, in terms of profitability, the industry should report far better results than we have seen in FY25-26.
Okay, Jashandeep, it's been a pleasure having you. Thank you so much for joining us this morning and giving us that perspective.
A pleasure. Thank you.
Viewers,